Futures and forex trading contain substantial risk and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please take a moment to review the full disclaimer.
Hello traders, I'm Kevin from chartspot.com. Welcome back to our channel. What if I told you the secret to smarter trading decisions lies in the data you might be ignoring? Intrigued? Stick around to find out how you can optimize your initial balance strategy using data. You see, in the world of day trading, making decisions based on gut feelings or hunches can be risky. That's why smart traders rely on data to guide their actions. And when it comes to data, one of the most overlooked yet powerful metrics is the initial balance. Today, we're diving deep into how you can use the initial balance statistics to make more informed and ultimately more profitable trading decisions. Trust me, you won't want to miss this one. Alright, before we dive into the nitty-gritty of using data to optimize your trading strategy, let's do a quick recap of what the initial balance actually is, especially for those of you who might be new to the concept. Initial balance refers to the price range established during the first hour of the trading session. In simpler terms, it's the high and low points that the market hits within that first hour. This range is incredibly important because it often serves as a foundation for the rest of the trading day. Now, you might be wondering, why is this first hour so significant? Well, the initial balance sets the tone for the entire trading session. It gives us a snapshot of market sentiment right out of the gate. Are traders bullish, pushing prices to new high? Are they bearish, driving prices down? Understanding this can help you see who's in control, be it retail traders, institutional investors, or a mix of both. So, in essence, the initial balance is not just a range, it's a crucial indicator that can provide you with valuable insights into market behavior and potential trading opportunities. And as we'll see later, when you pair this with data-driven statistics, it becomes an even more powerful tool in your trading arsenal. Now that we've covered what the initial balance is and why it's so important, let's talk about the game changer, initial balance statistics. These are not just numbers, they're a goldmine of insights that can help you make better trading decisions. Initial balance statistics involve analyzing the historical data to identify patterns and trends. For example, how often does the market break out of the initial balance range? Or what's the average size of the initial balance range on a trending day versus a non-trending day? These are all types of statistics that can help you identify high probability trading opportunities. Imagine knowing that 70% of the time when a certain condition is met, the market breaks out of the initial balance range to the upside. That's a high probability scenario you can leverage for a long trade. So, in essence, initial balance statistics can serve as a roadmap guiding you on when to enter or exit trades based on historical patterns. Alright, so now you're probably wondering, this sounds great, but where do I find these statistics? That's where ChartSpot's Market Stats platform comes into play. Market Stats is a comprehensive platform that provides daily updated statistics on initial balance, opening range, sell and close, volume point of control, you name it, there's a lot of them that you can consult there. Signing up for Market Stats account is simple and straightforward. Just head over to the ChartSpot's website, click on the Market Stats section, and you'll find an option to sign up for a free account. Once you're in, navigate to the initial balance statistics area and you'll find a wealth of data right at your fingertips. And the best part, You can customize how much data you want to see. Whether you're interested in the last year or the last 5 years of statistics, or you want to go back several years, Market Stats has got you covered. Let's get practical and dive into a real-world trading scenario to show you the power of initial balance statistics in action. Picture this: you're trading the E-mini S&P 500 futures, commonly known as the ES. The initial balance for the day has been formed, and you notice something interesting. The volume point of control is above the midpoint of the initial balance range. For those who might not be familiar, volume point of control is the price level where the most trading volume has occurred. And the mid is simply the halfway point between the initial balance high and low. So, what do you think is more likely to happen next? Will the market break the initial balance high or the low? Well, you probably guessed it right, and if you consult the historical data on Market Stats, you'll find that in the past 5 years, whenever the VPOC is above the mid in ES, there's a 69% chance that the market will break the initial balance high. That's a high probability scenario you can't afford to ignore. So you decide to take a long position, setting your stop loss just below the initial balance low and targeting a price point above the initial balance high. As the day unfolds, just like statistics predicted, the market breaks the initial balance high. You exit your position with a nice profit. See, you were right to trust the data. This is the beauty of using initial balance statistics. It allows you to make informed decisions, reducing guesswork and increasing your chances of a successful trade. So the next time you're in a similar situation, you know exactly what to do thanks to the power of data-driven trading. So you've seen the power of initial balance statistics in action, but how do you go about incorporating this data into your own trading strategy? Let's break it down. First off, how often do you find yourself hesitating before making a trade? Wouldn't it be great to have some statistical backing for your decisions? That's exactly what initial balance statistics offer you, a way to quantify your trading instincts. So here's some practical tips. Identify a high probability scenario. Use Market Stats to find scenarios where the market is more likely to behave in a certain way, like the 69% chance of breaking the initial balance high when the VPOC is above the mid in ES during the initial balance. Set entry points and exit points. Once you've identified a high probability scenario, use it to set your entry and exit points. For example, if the data suggests a likely breakout, consider entering a long position just above the initial balance high and setting a stop loss just below the initial balance low. Risk management. Well, always remember, even high probability scenarios aren't guaranteed. Use proper risk management techniques like setting stop losses and only risking a small percentage of your trading capital. And lastly, review and adapt. After you trade, go back and review how well the statistics aligned with the market behavior. This will not only build your confidence in using initial balance statistics, but also help you fine-tune your strategy over time. So, are you ready to start implementing these data-driven insights into your trading? What's the first high probability scenario you're eager to trade? As we wrap up, we'll summarize the key takeaways and how you can take the next steps to become a more data-driven trader. Trust me, you won't want to miss the conclusion. It's where we bring all these valuable insights together. Well, there you have it, folks. We've taken a deep dive into the world of initial balance and its statistics. And I hope you're walking away with some actionable insights that you can immediately apply to your own trading strategy. We've covered what the initial balance is, why it's so crucial in setting the tone for the trading day, and how you can use initial balance statistics to identify high probability trading opportunities. We even walked you through a real-world example to show you how these statistics could guide your trading decisions. So, what's your key takeaway from today's discussion? Are you excited to start leveraging initial balance statistics in your own trading? I'd love to hear your thoughts, so feel free to drop a comment below. If you found this video helpful, don't forget to hit that like button and subscribe for more content like this. And if you're eager to dive even deeper into initial balance trading strategies, be sure to check out this other video, the initial balance trade strategy fading the break, where we go in depth into a specific trade strategy using the initial balance. Thanks for watching, and as always, have a great trading week.